Steve in Chicago with the morning grain comments. Happy Cinco de Mayo for those who are celebrating. Grains are higher. Beans up 10 cents, corn up 4, wheat's anywhere from 3 to 9 cents higher. In the wheat market, Chicago and Minneapolis is up 40 to 45 cents from midweek lows. Kansas City is up 70 cents. A little bit of short covering after the drone attack on the Kremlin, but also a little bit of technical buying on a bounce. Still not seeing any fund activity that suggests that they're covering their shorts in the wheat market. Weather-wise, Northern Plains remains wet. Southern Plains, there is a conflict in weather models, but for the most part, we're thinking it's going to be a little drier than normal. And most of the conditions in Europe and the Black Sea are favorable. There is going to be a meeting of technical participants between the UN, Turkey, Ukraine, Russia, about the corridor, which expires March 18th. This is not a good sign, given that the participants are either technical participants or defense participants. Next week, not expecting much as far as the USDA report should show for 23-24 a slight increase in U.S. wheat carryout. All wheat's depending now on weather and demand, with weekly export sales out of the U.S. lower than expected, and the Russian grain board dropping prices to near 260 to do the Egypt business versus the 270 floor that's announced. Over in the corn market, trying to rally off recent lows. Talk about a lower Argentina corn crop with about 40% of the crop harvested yields around 71, which suggests a 30 million ton crop. Again, negative export sales was not positive to the marketplace. Cash is weakening because of slower export demand, but ethanol margins are favorable. Next week, the USDA's report should be a little negative, taking down exports and raising carryouts. In the beans, again, South America is cheaper to China. Their basis levels have softened over the last couple of days with absence of China buying new business. Argentina, with about 20% of the crop harvested, has a 17 yield, which suggests a crop of only 18 million metric tons if the last 80% of harvest is that 17 yield. Dalian, soybean meal, palm oil, soybean oil futures are all a little bit higher. But I think that the bean market bounced off the $14 level in the July and is still holding $12.50 in the November, given some of the uncertainty of the U.S. summer weather pattern. Next week, the USDA could lower old and new crop bean exports and show a little bit higher carryout, which might be factored in prices already. So it's still a choppy trade. Market really doesn't know where it wants to go. Outside markets, stocks are a little bit higher. The dollar's a little bit lower. Crude's back up close to $70 from a $73 low yesterday. Gold is lower, while coffee, cocoa, sugar, and cotton are all higher.